The other thing that I'm thinking about is, okay, and everybody wants to know, and none of us know, we don't have a crystal ball, when this cycle peaks. And a lot of people have PTSD from 2021 because the business cycle and liquidity peaked in March. Why? Because 2020 was that massive fall in the business cycle, massive stimulus. It was just a completely squashed cycle. Now, if I look at it, if I look at the business cycle, the ISM survey still below 50. We've barely started going up. So it feels that the probability is this cycle plays into the end of the year or even into Q1 2026. And that's a tail risk. I think the market's going to struggle with this. If I'm right, people are going to get out of risk too early and they're going to be forced back in at the end, and you get that 2017 final explosion.
Raoul Pal, CEO of Real Vision and a seasoned macro investor, believes that if this cycle mirrors 2017, a final parabolic rally could be on the horizon. Those who sell too early might miss out on significant gains. Pal suggests that we are entering the most promising phase of this cycle, with liquidity expected to peak before a market correction. He anticipates that central bank rate cuts and potential fiscal stimulus will fuel the next surge, dubbing this phase Banana Zone Phase 2. While many predict a peak in 2025, Pal believes late 2025 or even early 2026 is more likely. Despite the current bearish sentiment, he points out that financial conditions are beginning to loosen, setting the stage for a potential repeat of Bitcoin's post-2017 recovery. In a recent conversation with Joe McCann, founder of Asymmetric, a hedge fund that gained 202% in 1 year, Pal breaks down the macro trends that could extend this bull market longer than many expect. Make sure to stick around until the end of the video, as Raoul Pal and Joe McCann share their insights and predictions for the future of the crypto market. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
At the beginning of this year, I was actually, for the first time in a long time, tactically bearish. And I know you know what that means. It does not mean that all of a sudden I think the top is in and that, things are going lower. It's just that there was this confluence of odd events, which I know you recall on December 18th with the Fed. And what transpired after that was just a collapse in not global liquidity, but liquidity in the markets, right? We saw massive amounts of liquidity just effectively dropping out of the order books, not only in crypto, but also as it related to the stock market. We saw fixed income yields continue to push higher, which means bonds were selling off. We saw the day of the Fed cutting 25 basis points, the dollar rises. I mean, these are fundamentally things you don't assume will happen, and let alone the VIX spiking 74% the day of the Fed, which was the second highest VIX spike ever. I was looking at this going, everybody's really bulled up right now, right? And yet the market is telling us something slightly different. And so we managed throughout the end of the year, like I said, we had a great year, but for the first couple of weeks of January, frankly, we were short and in cash because we just felt like, look, number one, as you pointed out,
You actually went net short, or you?
Yeah, well, barely, not much, right? And this is all through fixed risk, right? So we put on some put spreads that were basically a 30-to-1 payout, and if they worked, great. It protects the book. We were heavy in cash. I mean, we still had some kind of, you call it January, Feb, March Bitcoin option structures on. So we did have some exposure in case we were wrong and the thing actually ripped. But we just didn't feel strongly that the first couple of weeks, given what had happened the last 2 weeks of 24, were, an obvious long. And we didn't see a bunch of new flows come into the market. And in fact, our view was correct that Bitcoin effectively cracked 90K, went down to 89K, and then just ripped straight up. So we are full bull again. And a lot of that has to do with the macro picture, right? So, you and I, of course, big disciples of global liquidity. There was obviously a break in correlation in Q4 that was largely the idiosyncratic move around President Trump and his win and, frankly, the red sweep. Because we saw Q4 on a notional basis was actually detracting a little bit from global liquidity. but that doesn't imply that the cycle is over. So we still are of the belief that at some point in 2025, we will likely reach some sort of top in global liquidity. That does not imply that Bitcoin is done. It just means that we're getting close. And so my view for the year, based on the information that I have today, is that I really feel Q1 is going to be the strongest quarter for risk assets in general. Q2, Q3, I don't want to say I'm bearish, but it's going to be more difficult. Q4, I think we have the opportunity for a rally again. And a lot of this stems from the fact that the S&P 500 had back-to-back 20% plus years. It's very difficult to replicate that for a third year in a row. It's not impossible. We see a lot of the headlines now, especially with Trump in office, hundreds of billions of dollars being invested by the Saudis, hundreds of billions of dollars being invested in Stargate, which is the AI infrastructure play. CapEx investments across corporates right now is huge. A lot of this driven by the AI boom. But as it relates to crypto, the sea change shift in sentiment around policy, I think, is actually one of the most bullish tailwinds. I'm sure we'll talk about the strategic Bitcoin reserve, but for me, the bigger thing is SAB 121 getting repealed. That's the staff accounting bulletin that the SEC put out that functionally makes it impossible for banks to hold crypto on their balance sheets because they have to count them as liabilities. That going away, and I know you know this as a former banker or working at the banks, unlocks a huge amount of potential for crypto within not only consumer banking, but frankly on the institutional side and the investment banking side.
Yeah, I've got a very similar view. I think global liquidity leads and global financial conditions lead that. For me, it looks like we will see the turn. We really need the dollar weaker, which it looks like it's starting to do. And that should pick us up. We know that the Treasury is going to start draining the general account. Reverse repo, last bit of draining of that. They'll probably have to stop QT. Then there's probably a few more rate cuts to come in. I think market has underpriced rate cuts now, having overpriced them earlier.
The fact that, our view really is that we think there's still 4 cuts. We think the Fed funds futures market is wildly mispriced at this point, right? And furthermore, I think reverse repo dropped below $100 billion this week for the first time in a long time. The Fed is going to have to end QT, right? Now, one other thing that we're looking into that we think is potentially a huge tailwind is that the Fed could potentially drop the reg caps on treasuries, effectively enabling banks to go to 0% on those and buy an infinite number of treasuries, right? So of course they will. And this is, I think this is, I know you know this, but we want to share with your watchers and listeners that these are tools of the Fed that a lot of people don't tend to focus on. Yes, they know about QT and QE. Great. That's understood. But there are other aspects that they can lever to actually improve the broader liquidity, calm the Treasury market. I think Bessent's going to do a fantastic job as Treasury Secretary. He's a really sharp guy, understands global macro dramatically, especially FX. So to me, the concerns around is the 30-year going to 10%, this nonsense that I keep hearing, it's just not going to happen. They still have a lot of tools at their disposal to make sure that the markets are actually functioning and flowing properly.
Yeah, the other one that's coming in that is below people's radar screen, it's starting in Europe as we speak, which is Basel IV, which is yet another version of banks are going to hold more bonds. But it's all the same thing, right? Which is QE, not QE, which is we'll force the system to own these bonds, and then we don't have to buy them ourselves because QE is now a dirty word. So they'll do anything not to do QE unless they have to.
Yeah, and I mean, look, I think for us, I think we wrote about this back in October of last year. China is still a huge component of this, right? I mean, their economy is not looking great is the diplomatic way of putting it. I mean, they have a major internal demand problem, domestic demand. As you're aware, their 10-year yields are hitting new all-time lows. It seems like every week. It's just the chart is horrendous.
Raoul Pal and Joe McCann highlight that, among G20 nations, China injected the least liquidity last year. They believe that even a partial return to normal liquidity levels could unleash a massive wave of capital into global markets, something they feel investors haven't fully accounted for yet. However, China's ability to stimulate its economy remains limited by the strong US dollar, which some view as a deliberate US strategy to push China into negotiations. Pal suggests that at some point, the US will likely agree to a weaker dollar in exchange for trade or geopolitical concessions, including matters related to Taiwan. This mirrors the situation in 2017 when Trump first took office, and a strong dollar was a major concern. Once the dollar weakened, China led a surge in global liquidity, even as the Federal Reserve raised rates and tightened monetary policy. With Trump back in office, a similar dynamic is unfolding. His tough stance on tariffs has momentarily rattled markets, but Pal reminds investors that Trump is a negotiator who often starts with extreme positions and later softens them as part of his strategy. With global liquidity expected to surge in the coming months, Pal and McCann speculate on its impact on crypto asset prices, particularly Bitcoin, Solana, and Dogecoin. They believe that as liquidity increases, these top cryptocurrencies could experience significant upside, much like during previous liquidity expansions. Let's return to the video as they share more in-depth analysis and insight.
The thing that I'm thinking about is, okay, and everybody wants to know, none of us know, we don't have a crystal ball, when this cycle peaks. And a lot of people have PTSD from 2021 because the business cycle and liquidity peaked in March. Why? Because 2020 was that massive fall in the business cycle, massive stimulus. It was just a completely squashed cycle. Now, if I look at it, if I look at the business cycle, the ISM survey still below 50. We've barely started going up. So it feels that the probability is this cycle plays into the end of the year or even into Q1 2026. And that's a tail risk. I think the market's going to struggle with this. If I'm right, people are going to get out of risk too early and they're going to be forced back in at the end, and you get that 2017 final explosion. That's kind of my working hypothesis now.
Yeah, and I mean, look, one of the things that we're also tracking that I don't think gets a lot of airtime is the credit cycle. I mean, the banks are actually highly incentivized and positioned to start lending pretty dramatically. This should continue to be a tailwind of the business cycle, as you're describing. And I do think, the PTSD, certainly in crypto, is warranted to some extent. But it's just such a structurally different environment, right? You have, the Fed funds rates still close to 5%. Real rates are still incredibly restrictive. They got a lot of room that could potentially cut. If you saw the CPI print recently, this implies PCE has been targeting towards 2% for almost 6 months now. Anything can happen, but the trend is clearly lower. You'll have these kind of idiosyncratic spikes in CPI and PPI, but ultimately the Fed is actually tracking towards their 2% inflation target. And with the boomer of the NFP print that we saw, a couple of weeks ago, granted, we will of course see this modified over time, it feels like the Fed still has the ability to cut. And so if you take looking at like the credit cycle, the business cycle, peaking in March just seems low probability. And I do agree with you. I think people are actually underexposed to the right tail at this point.
What do you think your asset allocation strategy is going to look like? Right now? I mean, obviously it can change, but
I'm going to respectfully disagree short term with you on alt season.
Yeah, and that could be true, yeah.
And part of the reason is that, I've had a view for quite some time that I don't think Bitcoin dominance has actually topped. I think it actually still has some room to run. This doesn't mean that certain alts won't actually rise. It just means that it's not a true alt season until you see a complete, kind of reversal in Bitcoin dominance. That being said, the alts that we are actually looking at, I mean, the size of our fund, we can't be in the trenches with the degens, so to speak, right? But I do believe that if you look at, obviously things like Solana, right? Like, let's just call it what it is. Trump launched his meme coin 3 days before his election, or inauguration, I should say.
We'll come back to that later.
Yeah, we will definitely come back. But if you look just fundamentally what happened on Solana, hundreds of thousands of new people onboarded, records amounts of trading volume on DEXs, record amounts of tips on Jito, which is a service that you can utilize to land your transaction faster. I mean, it's very difficult for me to still see a scenario where either A, Solana should remain 1/3 the value of Ethereum, or B, any of the high performance, high throughput chains can currently catch Solana.
Joe McCann takes a trader's approach, focusing beyond blockchain fundamentals to maximize returns through high beta opportunities. He sees strong potential in projects like Sway, which he believes could offer additional upside to a Solana-focused strategy. McCann is also optimistic about meme coins, calling them a serious asset class in 2024. Dogecoin, in particular, outperformed Bitcoin, Ethereum, and Solana, driven by Elon Musk's influence, the election cycle, and meme culture, making it one of the year's most obvious trade. Pal and McCann believe that Bitcoin and Ethereum spot ETFs were just the beginning, and a Solana ETF is inevitable. They predict that the next wave of ETFs will also include meme coins. Pal is particularly excited about the possibility of a Dogecoin ETF, which he believes could attract $30 billion in capital with ease. Looking ahead, both remain very bullish on the future of crypto asset prices in 2025 and beyond. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.